very excited to have on for the first time in the show, uh, CEO and founder of Indicator Smart, Rob Mitchell. Rob, how are you today?
Hey Tom, doing great, man. Thanks for having me on.
My pleasure. Glad to see you and have you on as well. So I know you're on the West Coast. I was out your way about a month ago, and for the first time in San Diego, really enjoyed that area. But just kind of want to get a little bit more insight into, you know, how you got started in the markets and your experience and how you started Indicator Smart.
Oh, cool. Yeah, that's goes back a long way, Tom. My mom, my mother, all she talked about was like two things. She talked about how much she hated her job. It's just like constantly like how much I hate my job. And then the other thing was she constantly talked about the stock market. And so naturally, growing up, I had an interest in the market because it was just like set in there. But I also had an interest in doing my own thing, and which was what I think ultimately she really wanted to do, but never really did. She worked for the Bell companies, and
Hmm.
she did very well with that. But they were always changing her pay plan. She just went on and on and on about it. So I think I had kind of a seed planted in me to do my own thing and to be involved in the markets. And so that started about 1979 or so. And then
So how
I
how are you involved in the market in let's say 79? Because people watching now are really fortunate to be able to trade whatever they can trade with the click of a button, but we didn't have that opportunity back in 1979.
right.
What
Um,
was that experience for you getting
well,
involved in the market?
yeah, that's a really insightful question because I didn't actually have a way to do it.
Hmm.
I had $500 that I had saved up. And I don't know what got me in this mindset of thinking, but I decided I was going to buy a whole bunch of manufacturers have Hanover calls that were like out of the money with $500. My mom told me I was crazy, but she could tell that I really was something I was going to have to do one way or the other. And there's no arguing, no arguing with me, right? So she hooked me up with her broker at Merrill Lynch back then. I don't even know what the commission was. Commission was probably half of the, you know, half of the thing. Because back then, I think a commission was like a couple $100 or something like that. Maybe not
Sure.
quite, but and I got the calls, and of course they expired worthless. And that was my first foray into trading and the excitement of it. And then of course there were a lot of lessons to go with it from there. Um, that I had to kind of learn as I went.
And eventually you came over to the future side of trading, right? So,
Yeah, so
um,
that would have started um, 1990, um, about 1994 or five, 1994. Um, that's a funny story too, because back then we didn't have you didn't have live data feeds. So I got this little box. I don't know if you remember, you'd get a subscription that the data would come over a FM radio
wow.
frequency. It
Sure.
was e-signal, I think it was called, and it was a little box, and you'd lease the box, and of course, they were telling you that it was real-time data,
Right.
you know, but of course, it really wasn't real-time data. It was like pretty delayed, but you didn't have any way of verifying that like you do these days. And so that kind of went from there. So yeah, super interesting stuff. And then kind of like also sitting at the core of that story is my educational background was in applied statistics and psychology.
Okay.
And so I started naturally applying statistical methods to the markets and developed my first uh, by 91, I was developing automated trading systems, which was absolutely unheard of at the time. There was no software for doing that. I used a Borland Paradox database to do it and a Prodigy data feed. I would go in and my modem would make those funny sounds and go in
Sure.
and pull the data every 15 minutes. And I was trading that way about 1991. And so then by 94 or so, like I said, I started with the futures. And then by 1997 or so, I think I was a commodity trading advisor.
Okay.
And by
Okay. See,
1998 or so, 1998, 99, 2000, actually became the largest E-mini trader in the world. We had trading thousands of lots in the E-minis at that time, you know. And at
and
that
how
time,
would you trade those? How would you trade those? Would you be trading electronically then at that point,
well,
right?
no, you're at that time, the maximum number of lots that you were allowed to trade, because the E-mini was just newly created.
Sure.
So at that time, the maximum number of contracts, as I recall, that you were allowed to trade on the electronic platform was 50.
Oh, okay.
And so all of our orders, I had to work with floor brokers on the at the Merc in the
Okay.
pit. Yeah,
Wow.
and we were placing, like 3,000 watt orders, stuff like that. It was crazy because in actuality, at the time, um, I I really probably wasn't qualified to be doing that. And of course, I had to rise to the occasion and learn how to do that. Yeah.
And so that kind of, with your statistical background, your kind of this engineering mind, but this financial mind too, kind of to me plays into where you are now, which is let's use the technology we have to calculate the date, whatever calculations we run on the data, you would know how to interpret and adjust, because there's a lot of adjusting into something like different indicators that you've made your own or discovered on your own.
Yes. And so that has been nonstop development of trading technology, really, is what we've done over all these years, is progressively developed more and more refined systems. A friend of mine runs a hedge fund, and I forget what year it was. He told me, "Have you read Nate Silver's The Signal and the Noise?"
Hmm.
And I was like, "No, I hadn't read that." And he goes, "You absolutely have to read that book." And those guys were developing trading systems that were modular in the way that they functioned. You didn't just chunk a bunch of things together onto a chart and then make a signal out of that conglomeration of things. You would take each one component on its own merit, and if it didn't stand on its own statistical basis, then you wouldn't use it. And so that uh, really was a huge jump for me, and that's known as Bayes' theorem, and that's the core of Nate Silver's book. Actually, is the applications of Bayes' theorem, and it's based on the idea that in a world of infinite information, if you will, that in a world of infinite information, you need to get a quality rating on the information that you're using, or you don't really, there's just too much noise. and too much misinformation and too much et cetera, et cetera, et cetera.
Well, and that's the temptation as you know, I think with anybody who's especially new to this type of work, which is trying to determine what moves the markets and what signals could be helpful, what indicators could be helpful. You know, as technology improves and you say, wow, I can throw everything into this system, or I can say, you know what would make this better? This would make it better. And you add another layer of complexity, and you if you broke it out, you might find, well, wait a minute, this doesn't change the signal, or it doesn't enhance the signal,
Yeah,
or it
you're,
might
yeah.
unenhance another part of the you know, there's so much there that you could do with all the data, and it's just knowing that, yeah, you have to be careful with that data.
Well, you actually have to consciously make a decision what it is that you're going to pay attention to,
Mm,
because I don't know where this came to me, and I don't know if somebody had ever said it before, but it just came to me one day, in a sea of infinite information, all information is no information.
right,
So, yeah, you have to decide what you're looking at, and you can't allow you actually, to be a good trader, you actually have to manage that very much these days. Like in the beginning, like we're talking about, there was very little, and then the market's moving faster and faster and faster. And like, with NinjaTrader down to a thousandth of a second, we can do just insane computations that you couldn't do with anything else, um, that can really start showing you things that are happening that nobody else can see.
right.
And this is a super super powerful thing. So that kind of developed from when I first got introduced to Bayes' theorem and the Nate Silver thing, and he was all the rage because he had predicted the election in all 50 states at that time, and but the nice thing about his writing was that it was in layman's terms. Even though I have a background in statistics, it was very understandable. And then I started taking various components and combining them together into what I called the four quadrants method of trading system design, which basically is a method of keeping you on track for exactly the things that we're talking about. Is that you take each part of your chart as its own, on its own merit, and you don't try to mix them together. And that's a very powerful thing, because you can develop a trading system that's much more likely, in my experience, to be robust and stand the test of time than one where you kind of blob everything together in a mishmash of information. Yeah.
So Rob, I don't know, were we able to iron out the screen sharing issue?
Well, I'm
Hmm.
showing that I'm sharing
Excellent. Okay,
a
great.
screen
Yeah,
right now. I think,
good.
um,
Yeah,
can you see that, Tom?
I can see that now. Yes, for sure.
Now, because I had a lot of things we had discussed about what we might talk about today, and I thought we'd probably just keep it on the four quadrant
Sure.
concept in that. So if everybody can see my chart here, I got two charts here. I got a 30-minute chart here, and then I have a NASDAQ chart here. And I chose the NASDAQ because you guys were talking about it when I came on.
Oh, great.
And so this is, if I just expand this out, this chart has three panels in it. It's got a Renko bar that I developed on here and on the panel one, and then it has two what we call the smart price bands, and then I've got 30-minute boxes around these data. Yeah. So this is C period to be the third period of the day, and D period. So I can kind of see where I am just in this panel. And then the second panel is the order flow component. So the first panel, I would call that price action. And
Hmm.
then the second panel, I would call that order flow. And the third panel, I would call it momentum. And I keep those what I do is I use a program that we have called trade markers, and I go in and I establish a baseline statistic for a given pattern on all three of those. So I have a baseline statistic for panel one. Usually those are bar patterns or geometries. You could call it if you wanted to, or just price action. And then, and I do it in this order. The price action comes first. So it's just like in chemistry, if you look at like, if you ever took like a chemistry class or something like that,
Right.
the molecules have, the 6-carbon ring,
Right.
right? And so it's the same kind of thing. We start with that shape or that geometry, and then because that's what's feeding the other indicators, right? And so then the momentum would be next. And the reason that the momentum would be next is because momentum will run a little ahead or a little behind depending on what its relationship is with the price action. But basically where you find that momentum can have some kind of a statistical validity where it's reliable as information is when it's what we call pulling. And so you'll see these dots
Mhm.
on here that I put on the momentum, and it tells you when the momentum is being pulled in a direction. When it makes that dot, that tells me that that bar right there is pulling the momentum up. And so I
Mm.
want the momentum to be getting pulled. Similarly, here I go just like A, B, C, D. I'm going lower here. And then the momentum is pulling from here where I get the red dot. And then the momentum's pulling from here. And you'll find like if you go over a chart with this, you ask yourself the question, well, from a scalper's viewpoint, for example, what percentage of the time does that follow through in the direction of the trade? And if you do it with the ABC structure, those numbers could come in, somewhere around 80% or somewhere in there, plus or minus. And then the third one that you would use, so first you got your price action, your ABCs, and then you get your momentum, and you want to have it pulling the indicator. And then the last component in a 3-point system like this would be the order flow, because the order flow is what really drives it. Yeah.
Right.
And so
So so
the
so Rob,
final decision is made on the order flow.
okay, so real quick, I just want to back up a little bit just so people can follow along. The Renko
Sure.
charts, you mentioned the 30-minute intervals. Just to be clear, Renko charts are not structured on time. They do reflect time and passage of
Yes.
time, but they're built on price action. That's why you say this is really a price action chart because it is advancing or declining only when we see that happen. You won't see a lot of small time consolidation. There has to be some price advancement
Yeah,
or
in order
retracement.
for a bar to complete, it has to be at its extreme. You'll see all these bars. You don't see tails coming out of the bottom of the bar when it's going down. You don't see tails going out the top of the bar when it's going up because, and that's also consistent with what I was calling pulling.
Hmm.
The indicator closes at its extremes, and that's super important because like a time-based bar, like a 5-minute bar, only closes at its extreme about 12% of the time.
Oh yeah,
But the Renko bar closes at that could be useful too, but you got to understand when you're feeding data with a 5-minute chart into an indicator, depending on the size of the tails and everything else, you're feeding a certain random component to your indicator.
sure.
And so you were really right on when you said this is a price action chart because
Right.
everything about it is being lockstep to that bar closing at its extreme under pressure. So the bar is under pressure, the momentum's getting pulled, and the momentum or the order flow, as opposed to like a ladder chart, this is showing me that the order flow is actually this order flow is actually all the way up past over here. So from this point to this point, this order flow is taking out all these prior points. And
Hmm.
so I'm pulling, and as I come out of here, I'm pulling, and that order flow is actually going out to new highs with reference to these things. And so that's a form of a divergence. And then when the order flow comes through there, because a ladder can't really show you anything outside the bar.
Right.
And
Right.
so this is showing you, oh, there's just extreme pressure. The market's pulling there, et cetera, et cetera. And so that type of an approach can help you to have a more robust trading system. Is the general idea behind it. And then, of course, like I said, we use things to test and make sure that it works, which is super important.
Yeah, so you make a good point about the ladder. The ladder is kind of going back to real time. It actually is real time. It's not a little device sitting on your desk that you rent out from, a different company,
Right.
right? It's real time, but it doesn't have that historical aspect, so you can't look at trend too much, right? You can see it bounce around, but you don't see that order flow trend, if you will, that you see in your indicator here.
Yeah, for my purpose and with this discussion, I want to be able to see both the inside and the outside,
Yes.
which
Yep.
is, of course, another important thing about trading, because if you don't know what the counter argument is, you click the button and you go, oops, I think
Right.
maybe I shouldn't have done that. You
Been
really
there.
want to have even more awareness of the counterparty than for the party. Because if you're immediately running into a counterparty, because the only way that you make money trading is if somebody else is on your side. Unless you have infinite money, you can keep pushing the thing in your favor. But that I don't think that really works.
No, no.
Yeah.
Um, so Rob,
Yeah.
we're kind of up against time. I do want to give, and we'll have you back on to,
Oh,
delve
cool.
delve a
That'd be
little
fun.
bit more into this. Yeah. But I do want to give you a chance to show people where they can learn more, because there's so much here. I know Indicator Smart is your website, but where can people, do you have anything else? Like, do you do anything on the socials? Do you put out tweets, or is it mostly everything's done? You're so busy with your website.
Um, thanks. So indicatorsmart.com is kind of like the hub.
Yes.
There are trading rooms that hub out of there, and then the YouTube channel. I'd encourage. I think we're on YouTube today, aren't we?
Yes, we are right
Yeah.
now. Yes,
Yeah.
exactly.
So, and congrats on 100K plus.
Oh, thanks.
um,
Appreciate that.
the So we're also on YouTube. That's my main social way, because I can do the videos there. And it's
Cool.
just those. I'm kind of semi-retired, so I'm not like running a big company. We're kind of a boutique kind of a thing. I do this because I'm passionate about it. I think you can probably tell. And but if you go over to Indicator Smart, you can opt in and get a free heat map indicator there, and then that'll also get you on our list where you can learn more about these kinds of things and get on. It'll tell you where the YouTube channel is and all those other resources there. So that's the hub that you'd want to do at indicatorsmart.com.
Awesome. Great. Yeah, everybody check that out. Indicatorsmart.com. Rob, thanks so much for coming in and showing us what you do. We'll have you back in a couple weeks.
The following presentation is for educational purposes only. All the symbols, trading ideas, and market commentary are for educational and demonstrational purposes only and are not recommendations or trading advice. Live sample trading occurs in a simulated environment. Past performance may not be indicative of future results. All the information and content presented is provided by NinjaTrader LLC, and the opinions expressed by all third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.